Hello traders, welcome back to a brand new video on the Brazil FX trading. So guys, in today's episode I'm going to teach you what we call fake breakouts. I'm going to teach you a strategy that we call fake breakout strategy, and I'm going to be teaching you how we can utilize this strategy and be able to make money, make profit out of this strategy. Because guys, to be honest, fake breakouts happen everywhere in the market. Fake breakouts happen everywhere in the market. So it's all upon us to learn how these fake outs, the fake breakouts happen in the market, so that we can be able to buy and sell in the market, guys. So if you're new around here, make sure to subscribe to the channel. Here at Brazil FX, I try to make forex as simple as I can. So make sure to subscribe, like. For those that watch without subscribing, guys, make sure to subscribe and turn on your notification bell so that you don't miss out whenever I post a video, guys. So let's get started. So guys, today we're going to be looking at the fake breakout. So there's a trade I took yesterday and it was of a fake breakout, and actually the last 2 weeks I've been using the fake breakout strategy only to take my trades, and this has mostly been on the Euro USD. Yeah, don't mind this. These are my swing trades from I think last week. Yeah, so back here. So for us to trade the fake breakouts, I like to trade on the Euro USD because the Euro USD, guys, it's the most traded pair in forex, Euro USD. And we're going to be looking at the 1 hour time frame and 15 minutes time frame. So for you, if you are a day trader, this is the trade for you, with the potential target of hitting this breakout. The breakout strategy works well if your target is around 40 pips, and then you're willing to risk around 10 pips and something like that. Sure. Because it has a nice risk to reward, because price never reverses and goes back to hit your stop loss. Yeah, price first goes down to your fake breakout, it fakes out, then after it goes back to the other way, so it can go back. So this is what we're going to be looking at. But before this, so this is where I took my trade, guys. I took my sell trade from here and sold up to down here. You can see down here, you can see here, you see these wicks here. I took my trade from up there to down here. But before that, let me show you the before price looked like this. This is how price was looking like. I told even everyone in the VIP to how this was the trade here. You see, this is my 15 minutes time frame. Actually, let me just go. But I told everyone in the VIP and the free group that we're going to be. I told them, look at the Euro USD 15 minutes chart. Yeah. Then after I sent a signal, the VIP. So this here. So this was the trade, guys. As you can see, this is my 15 minutes time frame. So what we have here is we have a rejection here. You can see this is my 15 minutes time frame, guys. We need to have something like an uptrend, so this is like my uptrend on my 1 hour time frame. Then we see this, you see, we see a rejection here. We see you see these are higher highs, then here is a higher lower highs. So this is like a head and shoulder pattern, so indicating that there is a possible reversal. But again, we're not very sure because our moving averages were still pointed up. They didn't show price was going to cross or anything. So it was just showing prices crossing just in between like this. It was just showing prices crossing in between like this, just coming down here. But these moving averages didn't cross. So meaning our biases were still for an uptrend. But again, we wanted to take a sell for this fake breakout. So I come back here. So this is what I told, guys. We have a possible breakout. So when we have something like this, everyone knows price is going to break out. Everyone knows that price is going to break out and come down. They don't think price will come back here. So they see this gap here. They think price is going to come and fill up this gap, which sometimes is true, but price doesn't like really go down. So when retail traders are thinking the other way around, you also have to think the opposite. When everyone thinks price is going to come down, you have to think the other way around. So as you can see, we had rejection here, rejection there, rejection here. So For me, I knew already price was going to at least pump down, you know, was going to do a fake breakout. And the reason for that is because, let me come here now. So this was now the trade, guys, when price broke out and started coming down. So the reason why we're having a fake breakout, because we had the what you call a demand zone right here. So let me jump here so you can see the demand zone. So this is the demand zone you had there. You see here, we had something like a demand zone here. So meaning price would come down, then after him, you know, crossing through, so it will just, you know, pump in here, and then after just bounce off and go back up, you know, to continue to go back in an uptrend form. You see, guys, but not to just, you know, keep on coming down just because you see a very big gap here to be covered. No, guys. So that was the demand zone here, guys. So let me draw it for you so that you can see. So this was it. See, so this was it. So you can see price came back down to that zone and covered it up. See, this was the zone here. You see, guys, but before this, you had to mark out where the breakout is going to happen. So the breakout was going to happen here, around that place, because that's why we had our rejection. So that's why we had the breakout, and then that's why the breakout would happen. So again, when price broke out, it came, see, it dropped like with big momentum. You see this candle here, this candle right here, this big one, this block one here, right here. So price, when price broke, it went down like water, you know, it went down. So when someone sees that big candle coming down like this, you see coming down, they never know, oh, okay, price is dropping, you know, they jump in. But after, immediately, look what happened. Price pulls back to close this candle as a hammer. You see, candle pulls back to close as a hammer, not even as a hammer. This is like it's like a morning star, not a morning star. Excuse me. So this is like a dragonfly doji. You see this one? It's like not a dragonfly doji. Why am I even confusing these words? It's like a hammer, you guys. This is like a hammer. Yeah. Anyway, they mean the same thing for the doji. So this is when you have a doji here, and then you have where you see the body pulls to up here. So a dragonfly doji can also, this can mean also a dragonfly doji. It can mean which candle is this? I've forgotten the candle, but it all showed us that price is going to go back up. Because imagine, guys, when price pulls from here, pulls back to close as this, you know, that's definitely price is going back up. And even here we have like something like an engulfing, so meaning price was supposed to go back up. So guys, we took both buy and sell trades. So my first sell trades were just here, sold from here, as you can even see here. So these were my sell trades. I took very nice 40 pips profits. Price didn't even reverse, go back up to hit our stop loss. And yes, guys, we had the stop loss and take profit. Let me show you here. You can see our stop loss is here. You can see here stop loss, then our take profit. So this was almost a 1 to 3 risk to reward. This was like almost a 1 to 3 risk to reward. So this is the candle, guys, I'm talking about. This black candle you see here dropping. This was the candle dropping. It dropped after it pulled back, you see, to close as that hammer, you see. So we didn't just jump in, you see. Even when price reached 20 pips, I told people to break even, but this was the before, as you can see. So when price comes there, then that means it has done what we call a fake breakout. You see, it has formed a fake breakout. But for a fake breakout to happen, we need to have a zone like this here. We need to have, you know, these rejection wicks from the past history. We need to have those rejection wicks from the past history. I'll show you here something else. So this is where the current market is. So meaning, this is where the current market is. So for us to go in for buys, we need to see price coming into that rejection. That's why at least you are sure that, okay, price may reverse from there if it comes into this zone here. But again, you need to see a fake breakout for you to, but guys, you have to be on smaller time frames for you to trade with these fake breakouts. Yeah, but again, we need to have an uptrend like this, and then we had a zone here. So this zone is what tells my mind, okay, price is going to break out. You see, price is going to break out. You see this. But for someone wiser, you can take this as an impulsive move. So now me, when I knew, okay, this is where price is going to drop even more. When you apply more concepts, so the first concept I had was like this structure, price is going to break out, but I didn't know how far it will go. Since I know in my head in my head I know, okay, how far price will go is this is a fake breakout, and then price may dip up to down here, because I've seen this happen many times in the market. So what I do, I just apply my fib retracement since I see an uptrend here. So I just apply my fib retracement, yeah, and then look at the levels where I think price will. So this is how you apply the Fibonacci retracement. You place from your swing low to swing high. You're on an uptrend. So this is what we have. As you can see, guys, my 50 level. From here to here, this is 100%. Then I want price to retrace 100%. I want price to retrace at least half of this move here. So now I take this as a retracement, as you can see, retracement. You see, now price comes down to my 50 level. You see. So now I know price will come back down to my 50 level. You get, guys? So meaning this was a good sell, knowing price is still coming back down. And then when price reached this zone here, when it started pulling back, that's when I went in now for buys and put my target just up here, you see, and took out another 40 pips, guys, because market always moves pips, you see. So just have to be able to conquer it. And guys, the way I'm able to master all this is because these days I only trade one pair. I'm only trading Euro USD. I also trade these other ones, but I'm more focused on the Euro USD. Yeah, it's almost my favorite pair now, guys. Let me show you another fake breakout. Another fake breakout. It literally happened every single time, guys. As you can even see here, this is also a fake breakout. You see here, see, this is another fake breakout for price to go back up. You see, price comes into this zone, so people think, okay, price is coming back down here, but it first pushes back up before, you know, coming down. But again, it pushes up at least 70 pips. You see, for scalpers can, you know, jump in here and then, you know, take trades. So if you see price dropping like this and then you see strong zones, then you can, you know, take in your trades and then put your take profit share and then have a tight stop loss. The reason why I'm telling you this, guys, is because you just need to look out for an uptrend, a downtrend, and, you know, you can even see here, you see, price comes back to this zone here. So guys, this happens every single time in the market. Every single time. There's no science around it. Just have to be able to master, and then you have to be able to apply more concepts so that you can understand our strategy very well. As you can even see, price now is dropping. So for me, I want to see price come here and reject here for me to go in for buys. Traders, as you can see, as I told you, price was supposed to come here, you know, so I was supposed to take here a quick scalp trade and put my stop loss just below, you know. So from here to there, let's measure how many pips. This is the US dollar. This is the US dollar. Let's see. This is the Euro US dollar. This is the 4-hour time frame. So meaning if I had taken the trade here immediately on the second candle, and then let's say our target was just around there, let's see how much we would be bagging or putting in the bag. Let's count here how many pips. This is Euro USD. So we're going to go to the 1-hour time frame. Yes, okay. So guys, you're going to measure. So when you're trying to measure your pips, you come here, select this pencil right there. Then let's say we took the trade just here when price opened, this other candle opened. You see, guys, we'd be bagging 16 pips. Let's say, you know, let's say right here. You see here, this is also a zone where price would not reach. So whenever you're selecting your take profits, you just look out for major zone. So first major zone is right here. You see here, and then on top also. So meaning if we are taking the trade, guys, would bag 20 pips, quick pips, and just put our stop loss below. You know, because since we are scalping, you see, guys, I just the first videos I made, I was explaining to you how we can use fake breakouts. You see, this is a fake breakout, but I wouldn't say this is more of a fake breakout. No, I wouldn't say this is a more of a fake breakout. Yeah. So price came down. We had this nice impulsive to the downside. This is a sharp move, you see. Then we had to have like something like a retracement or a pullback, you know. So price pulled back, but again, this is a strong zone. That's why price is having time to go in there. But again, as I explained to you before, price would come back to this zone here. I drew out this zone, yeah. But again, for the one I explained before, this was a breakout, a fake breakout. You see, since we had this zone here, this was a strong zone, and then everyone thought price is going to break out and then maybe drop up to down here. But again, for us, we knew it was just a fake breakout since price. So we took the trade on this candle that looks like a hammer, and then when price dropped up to down here. So when you know, how do you know that it's not a fake breakout? When price drops down, it breaks out with a big candle and closes with a big candle. That's how you know that it's not a fake breakout. But when candle pulls, you see this candle pulls back to close as a hammer, then it means that's a fake breakout. So meaning the other candles are just going to be pumping or showing that okay, this is price is now going back where it's supposed to break out to, not the other way around, guys. Guys, this is the simplest strategy. Test it out on your demo account as much as you can. Even though you want to test it on the real account, test it on the real account. But just make sure always your stop loss is tight, because risk management is key in this forex industry, guys. I hope you enjoyed that video. I also enjoyed the video, guys. Make sure to subscribe, guys. I'm bringing more content, more live sessions are coming in, and also, guys, let's keep on pushing this channel, guys. We are really doing great. We are pushing more people are reaching out. We're changing more lives, guys. The more you like, the more you comment, the more lives are being changed. People are learning how to make money with the forex market, guys. Bye.